Chris Williamson sums it up perfectly. It's the Brexit decision clearly weighing on optimism momentum, as evidenced by the PMI data. Construction yesterday and services today is, to use his words, gradually being lost.
Yeah, exactly, that momentum, that new orders, new business ideas, new investment is certainly slowing, and we're seeing it across the more sensitive areas. First, the manufacturing and construction yesterday, which took quite a hit on those PMI numbers, and then today services, which, as you rightly mentioned, a much larger portion of the economy, very important for the financial centres of the UK's global presence. Not having that momentum is going to be a challenge, and is why UK growth doesn't look as strong in the outlook for the next few quarters.
Is any talk of a rate hike in the sort of near to medium term, Stephen, off the table now? I guess we have two hawks on the MPC, but is data like today pushing forward the case that the bank stays on hold for quite a duration?
Yeah, I mean, that's our view, and it's been our view even through this period when we've had, as you mentioned, two of the MPC members voting for a rate hike. I think the interesting thing as well about, coming back to the survey as well, is that the services survey has been fairly sort of flat line. I think it's probably going to weaken a little bit further. Manufacturing survey has been a little bit more robust.
Best in 4 months.
Partly reflecting, obviously, the weakness in the pound. It was interesting that we had a survey from the Engineering Employers Federation overnight. Again, saying how strong the manufacturing has been, but largely as a function of the strength in Europe and with domestic manufacturing orders, for instance, looking pretty weak. And the EEF said also, which was interesting, that they suspect that strength from Europe will tend to sort of start to dissipate. And I can sort of see that to some extent. I think we might be at the sort of sweet spot, if you like, of this sort of demand from Europe as a function of how the European economy is doing, as a function of how sterling has been falling and helping. And going forward, if that support from manufacturing starts to wane a little bit and services are still not picking up, then probably growth forecasts are a little bit worse than maybe even the EEF are suggesting, which is sort of 1.6 this year, 1.3 next year. Could be a little bit lower than that.
What about